Shikar everyone, I'm Georgina from Estra Finance and I'm so glad you're joining me for part 2 of how to increase your chances of getting approved for a home loan. If you caught part 1, you already know we've got some solid tips up our sleeves, and if you missed it, you can find that video linked down below. Today, we're diving into even more tips that'll put you in the best position to get that home loan approved. So stick with me, and by the end of this video, you'll go from feeling overwhelmed to over-prepared. Simulan na natin. Alright, so tip number 1 for today is to improve your debt position. Now I know that sounds kind of weird, but it's actually really simple. What I'm saying is try to pay off some of the money you owe before you apply for a home loan. And hey, quick side note, doing this not only boosts your chances of getting approved, but it also lets you borrow more money. We'll dive deeper into borrowing capacity in a future video, so make sure you stay tuned. Now when I say debts, what comes to mind? Your car loan, personal loans, those little installment loans you might have taken in order to buy your iPhone, credit cards, or even government loans if you have any. Yeah, all those add up and the bank is definitely taking notes. So why does paying off some of these debts make a difference? Well, it all comes down to something called your total debt ratio. This is basically a big math problem the bank solves to figure out if you can handle paying back your home loan. The less debt you have, the better you look on paper. Makes sense, right? You lower your total debt and the bank's like, this person's pretty responsible with their money, so we can give them the loan. Bottom line, less debt means you're a safer bet for the banks, which means a better chance of getting that all-important approval. So start chipping away at those debts if you can, because every little bit helps. Moving on to our next tip, clear up any overdue payments on loans or credit cards. Now this might sound like common sense, but you'd be surprised how many people overlook this step. If you've got overdue loans, be it personal loans, installment loans, car loans, other home loans, or even small credit card balances, let me tell you, that is a red flag for the banks. Here's the deal, banks don't like risks, and someone who has overdue payments is basically like having a flashing neon sign over your head shouting, I might not pay you back. So if you want to avoid getting a quick rejection from the bank, clearing up those overdue loans and credit card balances is a must, because it's all about trust, right? Banks want to know you're good with money. If your record shows that you've got a habit of missing payments or letting loans go unpaid, they're gonna think twice before giving you another loan, especially something as big as a home loan. Alright, so we've reached the third major tip for today. Check your credit report and clean up your credit history. But what exactly is a credit report? Imagine it's a report card, but for your financial life. It's a detailed account of your financial behaviors from a debt and credit perspective. Do you pay your loans on time? That's in there. How many loans have you taken out in your life? That's in there too. Have you ever been late on a payment on a credit card, or if you had legal issues related to your finances? You guessed it, it's all recorded. Your credit report is so thorough that it even shows if you've ever defaulted on a loan, declared bankruptcy, or if you have ongoing disputes with lenders. Banks look at this report card to judge how risky or how safe you are as a borrower. Now, how do you get this treasure trove of financial information? Companies like TransUnion or CIBI can hook you up. You'll have to pay a small fee to access their records, but it's a small price to pay for an investment in your future home. Also inside that credit report is something super important called a credit score. This is basically a numerical summary of your credit worthiness. Think of it like your school grade, but for debt. If your score is high, banks are more likely to think you're responsible with money. More and more banks are using this credit score as a key factor in their approval process. So if your score is on the lower side, you could get automatically rejected, no questions asked. This is why it's crucial to know what's in your report and to clean up any blemishes. Got an unpaid loan? Pay it off or make arrangements to settle it. The cleaner your financial slate, the better your chances of securing that home loan. If all of this feels overwhelming or you're worried that something in your credit report could get your loan application rejected, remember, you're not alone. Reach out to us at Estra Finance. We're here to help you navigate through your credit report, identify any potential red flags, and give you actionable steps to improve your chances of getting that thumbs up from the bank. Okay, so we've unpacked what a credit report is and why it's super important. Now let's zero in on something we touched on earlier, your credit score. This is where you can really take control and boost your odds of securing that home loan. Remember, your credit score is like a grade for your financial behavior. Banks have a minimum score you've got to hit if you want your loan approved. So if you're below that threshold, your application might not even make it past the first round. Now you might be wondering, how do I know what the minimum credit score is? This is a great question, and the answer is it can differ from bank to bank. So the best approach is to ask ask the bank directly or look at their guidelines online. That way, you know exactly what target you're aiming for. And here's the greatest part. Your credit score isn't set in stone. You can improve it. You've got some control here. So how do you give that credit score a boost? Tip 1, pay your bills on time. Consistency is key. In fact, this is the biggest factor when it comes to your credit score. So please pay your debts on time. And tip 2 is avoid exceeding your credit card limit. It might seem convenient to max out your credit card, but doing so can really hurt your credit score. When you reach or exceed your credit limit, it indicates to banks and financial institutions that you tend to spend more than you can afford. So keep an eye on your spending and stay well below your credit limit to maintain a healthy credit score. And we have even more tips like this coming up in future videos. Alright, moving right along, our next tip is a biggie: avoid new debts. Now you might think, I need to get some new furniture for my soon-to-be house. Why not buy it now while it's on sale? Do not do this if it's going to put you into more debt. Why? Because it affects your total debt ratio, which we've talked about before in other videos. Everything that affects your TDR needs to be kept as untouched as possible until you've signed your home loan agreement. So as soon as you've applied for a home loan, forget about buying anything that will add to your current debt situation, because changing your current debt amount will change your suitability for a home loan. So the golden rule here: wait until your loan is fully approved and you've signed on the dotted line before taking on any more debts. Your future self will thank you. Okay, let's talk about work for a second. If the bank can't confirm that you've got a stable job, guess what? Your loan application might get declined. So how do you make it super easy for the banks to confirm you're employed? The answer is CIBI. It's one of the places banks check to verify employment details. If you're already listed there, great. Your employer loves you and they're doing the right thing by you. But if you're not there, you need to ask your employer to register your details into the CIBI system as soon as possible. Unfortunately, you can't do this yourself. Having your details in CIBI just means that the bank can easily see you're actually employed with who you say you are. It confirms that you're telling the truth about your situation and that you have the wage you say you do to pay back the loan. Taking this little admin step can help eliminate any unnecessary bumps in the road and get you that much closer to securing your dream home. My next tip for you is a little more complicated, and it involves waiting for better interest rates. Interest rates are a big deal, guys. They dictate what you'll be paying every month for your home loan. And of course, that's a key figure in calculating your total debt ratio. The lower interest rates could mean a lower monthly payment, making it easier for you to pass that total debt ratio hurdle. Sounds good, right? But waiting for interest rates to drop is kind of like playing the lottery. It's super unpredictable. You never really know when rates are going to soar or when they're going to plummet. And if you wait too long, you could miss out on the property of your dreams. Remember, real estate is a long-term game. The sooner you get in it and stay in it, the better. Weigh the pros and cons carefully if you're thinking about waiting for rates to change. It's a risky move and you have to be sure it's worth doing. And last but not least, we're going to talk about something a lot of people don't usually consider. There are some jobs you need to be careful with when you apply for a home loan. Yeah, some jobs can make it really tough to get approved for a home loan. For example, if you're a casino worker, especially one dealing with money, many banks might just say no thanks right off the bat. Same goes for freelancers. It's not that these jobs are bad, it's just that they're considered higher risk from a banking perspective. High risk jobs can also include some government positions and police work. So if you're in any of these industries, that might be why you're not getting approved for a home loan. But let me take this opportunity to put in a little disclaimer here. Just because you're employed in a high risk industry does not mean you will get rejected, and it also doesn't mean that it's the only reason you're being rejected. All I'm saying is that it could be a contributing factor. Banks don't discriminate with their applicants. They don't look at your file and go, oh, here's a card dealer, chuck his application out. Every bank has their own definition of what a high risk job is, so my examples are just that, examples. But I am saying that it could be a contributing factor as to why you're not getting approved. But all this goes to show is that every bank has its own set of rules and lending criteria. That's why it's super important to ask the right questions when you're shopping around for a loan. And hey, if all this seems too complicated or overwhelming, that's what I'm here for. At Estra Finance, we know these rules inside and out, and we can guide you through the maze that is the loan approval. Alright everyone, that brings me to the end of this two-part series on ways to increase your chances of getting approved for a home loan. As always, before we end the video, I'd just like to mention mention two things. Firstly, if you're in the real estate industry and you've got clients who could use a loan specialist, we'd love to work with you to help your clients find the best financing for their situation. Estra Finance has a great referral program with uncapped commissions, so please sign up to our referral program using the link down below. And secondly, if you're a potential home buyer and you're looking for some expert guidance from before you start buying your home to getting your loan approved to refinancing your home to get a second one, we're here to help. Check out our website and jump on our list using the link below. We will be reaching out to every single one of you on launch day, so get in early. That's a wrap on that. Please show your support with a like, comment, and subscribe to the channel. Ingat!